Hello everybody, welcome back to another forex market analysis session. My name is Alexander Nikitin. I'm a professional trader and the developer of pattern search software. And in today's video I will talk about one of the most accurate patterns ever created. This pattern is called the Cipher Advanced Formation. According to my market research, some pairs are as much as 86% accurate with this pattern. Okay, so you can have the complete reference of these rules on my website. Just go to www.ps-software.net, click that Learn the Patterns tab, and you will have this page. Don't be lazy, guys. Scroll this page to the downside. And under that Advanced Patterns section, you can find the Cipher Advanced Formation. Click on that. It is very important to click on that. If you don't click, you don't have the magic of having this description. After that, don't be lazy. Once again, this picture is not the explanation yet. Scroll it lower and find the identification rules, execution rules, and trade management rules. So I explain it to you in these details because I had pretty many requests and I had pretty many irritated comments that traders, in quotes, don't understand this tutorial because they never read it. They never scrolled the page. They are lazy, just looked at the picture and didn't do anything else. That's why they didn't understand. Okay, so bookmark my website. If you still have questions after watching this video and after reading the information on my website, you are free to ask your questions in private messages, maybe on this here on TradingView. Drop me a line. If you are new to TradingView, or I don't know, if you hear about Alexander Nikitin for the first time, you can always find me this way. Go to the TradingView main page like this, and you will have that top authors. Click on those top authors, and if you don't have me in this list of today's tops like this, you actually have me here. You always have me in all-time top authors. According to TradingView rating, I am somewhere in the top 10 traders. 1, 2, 3, 4, 5, 6, 7. Right now, currently 7. Just click that message. It will appear here, or follow, or whatever. Well, that's it. Pretty simple to find me. And then drop me a line, and you will have that. I will try to answer all your questions. Okay, so the Cipher strategy is actually the swing trading technique. So the first thing you need to do, you need to identify swing correctly, and to do that you need to switch to line chart. It will show you the closing prices, and then you need to keep in mind that a minor trend is a part of intermediate trend, and intermediate trend is a part of major trend, and that an uptrend is a series of higher highs followed by higher lows, and a downtrend is a series of lower lows followed by lower highs. So keeping these two things in mind, you can identify swing correctly. Okay, let's mark the initial high, low, and the initial high. So look at this price action. We move opposite as compared. We move to the upside, now to the downside, and then we've broken this most recent high. This price action installs a higher low. Then we go higher, higher, and higher until we start moving opposite. Opposite price action installs a higher high. And then we reverse and break that higher high. This price action installs a higher low. So this sequence of higher highs like this followed by higher lows is actually an uptrend, and this uptrend continues until this sequence is broken. So like this, we have a higher high, then we move sideways until we break it, and we break it here at this point. So the lowest point between this higher high and the breaking point is the higher low, and then the most recent higher high is here. So this sequence of higher lows is broken to the downside because price action installs a lower high. I am to take a line tool and unite the most recent, the extreme low to extreme high, to have this swing. And then you do the reverse. This is the high, this is the low. Yes, this low was broken to the downside, so the highest point between those points is the lower high. Then we have a lower low, and then it broken to the upside. This means that it is stopped like this. Okay, let's measure this formation. We have low, we have high, but instead of higher low and higher high, we have lower low. So it finished pretty quick, pretty fast. We only have that. Then we have high, and the most recent low is here, so the breaking point is here, so this is the low. You see, the high and low, and then it was stopped as we have broke our high. So it also finished pretty quick. So the next price action installs a higher high. As we go further, we install the higher low. You can see this is the breaking point, this is the high, and the higher low is the lowest point between them. That's why we don't place the higher low here, we place it here. So the uptrend is alive until we have a series of higher highs, but in this movement we've broken this higher low, and that installs a lower low. So we have this picture. Impulses, those movements that install the direction of a trend, they are actually one leg movement. They typically are one leg. If you have one line, according to this price action, according to this swing identification technique, then most likely it is an impulse. And if you have a series of smaller lines like this zigzagging, then this is a correction. Corrections are typically those complex formations, and impulses are straight. That's why the rules for advanced formation says that the X to A movement should be an impulse leg or an anchor leg, and that's why it should be only one movement, only one line. So if you stretch the Fibonacci's, you should stretch it this way, from X to A, and it is prohibited to stretch it this way. If you stretch it this way, you unite several swings. You unite one impulse, you unite correction, and you unite second impulse. This is not correct. The correct way is to measure only one impulse. If you want to stretch it this way, then you should switch to higher time frame, maybe to weekly time frame, to have a larger swing degrees. Okay, so the first thing you need to do, you need to identify your X to A leg, and this is your first leg. And then you need to enable 382 and 61A, 382 and 61A lines on your Fibonacci's. And the second rule says that the B point should at least touch 382, but it should not close below 61A. But the candle wick can spike it through. It can go to whatever level. Technically, it can go to 786 if it doesn't break the rule number 4 about the D point. I will talk about that rule a bit later. Okay, so no close below 61A. We can touch, but should not close. And the minimum requirement is to touch the 382. If this criteria is met, then we need to measure the extension of A to B. From X to A, like this. The extension of X to A. and this time the C point is valid if it at least touches the 127 extension and doesn't close above 1414. If it does, then the pattern is invalidated. So the candle wick can go to 1618, 1786, 2618, whatever level, it doesn't really matter. If it doesn't break the criteria number 4, of course. So the higher it goes, the higher would be your 786 entry point. That's why it may break the criteria number 4. Okay, so that's it. Once you have that C point installed and it is okay, then you need to measure your entry point. As I just told you, it is 786 from X to C. Let me move it. 786, like this. Let's suppose that you had a lower high here, like this. Your B point was this. As I told you, it can be whatever the candle wick, because you didn't have the closing price, yes? And you have a wick here, like this. Yes? It will also be valid because it goes higher, but it doesn't close above 1414. The highest close is here. So in this case, the cipher can be invalidated, because if you stretch it to the highest high, let's go higher, like this, and let this be lower, like this. If you stretch the Fibonacci this way, this would be the entry, and it will be higher than the B point. It cannot be so. So this is the invalidation of the pattern. Okay, let me adjust to the current price section. Right now it is obviously lower than the B point. It is exceeding the B point, so the rules are okay. If the rules are okay, then you need to measure your targets, you need to measure your stops. This is the pattern, X to A to B to C. It is completed at 786 line, so the price should first go lower. I don't know if it ever go there. What are the probabilities? I don't even care. If it goes lower, I know what is the probability of moving higher after that. We first need to touch this line, and then it will go higher. I don't know if it ever goes there. It may never go there. So do not sell it right now in anticipation that the pattern will complete. It is, I don't know, it is very silly to do that. Just buy it at this D point. As you will read on my website, the stops are 113. It is here, the stop loss. It should be below X, 113. And the targets are the 382 and 618. Target. So this is target number 1. You break even your trade and close half, and this is target number 2. So the accuracy of hitting the target number 1 is more than 70%. More than 70%. And also you need to do the target adjustment. So this means that the targets are dynamic. If price touches the D point and don't reverse immediately to the upside, if it goes first a bit deeper and deeper and deeper, you need to restretch your Fibonacci's, and as you see, if you restretch your fibs, your targets are moving lower and lower and lower, like this. So this is called target adjustment. Yes, it is a bit tricky, it is a bit complicated. That's why you need to first train your eyes to identify that. You need to first do the back testing of this pattern, and I advise you to do about 100 per time frame per pair. This means if you want to trade euro dollar, you should back test it on 15 minutes, whatever you want to trade. 1 hour, then 4 hour, then daily, if you want to trade all those time frames. And this means that you need to find 400 examples for euro dollar only. And if you want to have more pairs in your portfolio, like pound, dollar, Aussie, Canada, and so on and so forth, you need to do 400 for those as well. 400 per each pair if you want to trade 4 time frames on one pair. Okay, how much time it will take? It will take from 6 months to a year if you will work very hard. At least, I don't know, you should work at least 8 hours a day to find those patterns. You just imagine that. I am recording this video more than 10 minutes already. It is 10 minutes is only needed to draw, to check all those swings, to draw those swings, to check the ratios of the pattern. So if you spend 10 minutes on each pattern and you need to find 400, so how many minutes you need? 400 multiplied 10, so it is 4,000, and let's divide it 60 to calculate hours. You need 66 hours. Let's divide 8. If you do 8 hours a day, if you work, it will take you a week per one pair. So if you wish to trade 20 pairs, you will need 20 weeks. That's actually the 6 months. 20 weeks, almost 6 months, maybe 5 months. Working 8 hours a day non-stop. So you should prepare for yourself that it's not an easy work. It will require some efforts on your part. Lucky for you, I have created a special software that can do that all for you. You can resolve all those problems, that time that you need to spend, your efforts that you need to spend by simply getting the software that I have created. And let me demonstrate it, how it works. The only thing you need to do in case of manual software identification, you need to press C on your keyboard and click X to A to B and C. And here's the magic. If the points are correct, the software analyzes them, and you don't need to stretch anything. You don't need to remember all those rules. You will have the pattern drawn if the points meet the criteria. So you will have the entry 786 entry, you will have the stop 113 stop, and the only thing you need to do, you need to stretch your Fibonacci, set the targets, because the targets are dynamic, as I told you. You need to restretch them until you get that either stop loss or take profit. Just set that. Actually, my pattern trader system does that automatically, and my clients receive the pattern trader system for free. It is done especially for trading with my software. And if you don't want to do that manually, yes, you can draw patterns even on history and even faster, like this. You see a pattern, just 2 points to draw the pattern, like this. For backtesting, 2 points. You only need 2 points. And for ciphers, you need a bit more. So you can backtest it this way. You see how fast I have found 4 patterns. So to find 400, it's not a very difficult task when you have the software. Oh, let me show you even this one. If we have a pattern here, yes, we have a pattern, and it was a pretty good pattern working here. Let me show you this one. Like this, smaller patterns, just my eyes are grasping those patterns. Okay, or if you don't want to do that manually, you can also use the automatic software that I have also created. Let me enable advanced patterns. We have both advanced patterns and harmonic patterns, and they are pretty different if compared one to each other. So as I today am talking about the advanced formation, so let us only analyze advanced formations, and those patterns will be drawn for you automatically. You don't need to do anything. And what is remarkable about my software, that it's not only draws the winners as most software do, like this, winner after winner after winner, and you feel amazed, wow, the software never loses. Well, I'll tell you the truth that every strategy has losses. It is inevitable. You should play the probabilities. If the strategy is about 70% accurate, this means that out of 100 trades you will have 70 winners and 30 losers. You will have those 30 losers. If you try to avoid those 30 losers, you will subconsciously looking for some filters, and that interferes the probabilities. If you apply some, I don't know, moving averages, if you apply some additional Fibonacci ratios, if you apply something else, it is like adding an additional side to a coin. Instead of having only two heads and tails, you have them 3, you have them 4, and the probabilities change. That's why you should, I don't know, you should accept the risks. You should accept that you will have losers. Without losers, you won't have winners. Okay, I am now having some explaining some psychological aspects of trading. So without losers, you won't have winners, because the strategy contains both. Even if you have an 80% accurate strategy, this means that you will have 20 losers. If you don't want to have losers, this means you don't want to have winners. Think of it from an entrepreneur's point of view. An interpreters from a businessman point of view. Not interpreter, but entrepreneur. Interpreter, I suppose it is a translator. Well, at least I'm not a good interpreter. English is not my native language. Okay, so what I was talking about. Think of it from that businessman perspective. If you want to achieve some equity highs, you need to invest some money. So stop losses, or simply losses, or whatever losing patterns are actually those investments. You invest into your further patterns that will be your winners. If you don't invest something, if you don't invest anything, if you try to avoid those losses, this means you will avoid winners. You will break the probabilities. That's why my software is absolutely objective, and you can trade it because it draws the patterns both on history and real time. You can see that the pattern didn't complete yet, but it is already drawn on your chart, and it is you have all the time on the planet to prepare yourself for that. It will take several days, and we already know that somewhere in this space is a very good buying area. Well, that's it about the pattern. Let me just quickly remind you the steps. First, you need to identify the swings. You first need to identify the impulse leg, followed by correction, and followed by another impulse leg. It is very important. If it is so, then you stretch to measure your first XA leg, you find the B point, then you measure the extension of XA leg, you find the C point, and then you measure the X to C point, and you measure the 786, and it should be lower than B point. If they all meet together, then you will have that. I remind you once again, you can always ask me your questions in TradingView private messages. I have plenty of questions here, so plenty of traders contact me, and I try to answer all those questions until they are stupid questions. Something like, do you know what will happen to gold? How can I know what will happen to gold? I'm not a magician. I don't have a crystal ball. I can calculate the probabilities based on my trading analysis, but I don't know what will happen. It was just an example. Okay guys, if you like this video, give me a thumbs up, share this video on social media as usual, and follow me, subscribe to my next videos. I will record some more. Until then, good luck, good trading, hope to see you soon.